So what we're going to do in this video is go through mitigation and exactly what it is, because it's basically how the markets need to move in order to, function properly. So let's get straight into it. So what is mitigation? Well, in simple terms, mitigation is a close of current positions from, large banks and institutions. The market makers will return price to, let's say, an order block, for example, to collect their orders, close out of them orders, from current or previous positions, and then stack on more orders, which is why we usually see price reverse from these order blocks, or why these order blocks, are respected, which you can see on this chart here, which we'll get into. But price will usually get manipulated in order to close out their positions before reversing price, as just mentioned. So below we have a chart of gold, which is showing a great example. So what we're going to do is go through this chart and identify where mitigation takes place. So if we just start from the bottom and just work our way up from this whole move, as we can see, we're clearly trending to the upside, higher highs and higher lows. So if we just start here, so we had this move down, which was probably due to, a bit of news from that candle, but then saying that we are on gold, which can move, aggressively. But anyway, we have this move down. On this candle, we left some, imbalance, and you can see price pulled back to half of this candle before then pushing down. And then what we can see is here, we had this move up. Now, this isn't considered a break of structure because we had this lower low here, and then we can say our swing point or our lower high would be somewhere up here, or even this wick. Okay, so we pulled back, but we did not put in a new lower low, so price did not break this lower low here. Okay, so these highs is not confirmed as, a lower high. So we pushed up with this move, but it hasn't. This is not a break of structure because we didn't get a confirmed lower high from here. Okay, so this is not considered an order block. So what you may have is the last down candle, which would be here, but it's not considered valid for me because we didn't break this lower high here. Okay, so if we just move on, you can see we push up, but then we do pull back, then we do break structure. That's a valid break of structure for me. So I'll mark it on. We can see not with that candle there, but the next candle actually broke the high. Okay, so break of structure. So what does that mean? Well, once we broke structure, we have the last down candle, which is here. So price is likely to come back. It doesn't have to. It can be left unmitigated and then price can continue. But that just means it's used for a later date, if anything. So what we can see is we broke structure, we put in a new higher high, which really was up here, new higher low, last down candle before the up move. This is a bullish order block, price came back in, and this is a mitigation. Okay, so money came into the market here, larger orders, price then came back into that level, mitigated their orders or any sell positions that they had prior, came back into that area. We had a bit of imbalance in price that was mitigated, basically meaning filled, and more orders are being entered here from larger interests of money, and then you can see price reversed from that area. So this is not just happening by luck, it's all calculated, and yeah, that is a mitigation. So if we carry on, the next valid break of structure would be here. Now again, it wasn't with that candle, but the move did start from here because we pulled back, then we had quite an impulsive move up. We had a doji here, but then we had another candle momentously breaking that high there. Okay, so break of structure, which is that high. So prior to this, we had a higher high, higher low, a mitigation of that order block, higher high, higher low, and we have the exact same thing here. So we have a bearish order block, which is the last down, a bullish order block, which is the last down candle, but we can refine it as we've learned in previous videos. We can refine it to that candle because this hasn't actually engulfed the order block. So that's the candle that we can look at, okay? Then we broke structure. We had a wick mitigation. Okay, so is that by chance that we come back in to fill, at least 50% of that order block, or, their orders, closing out some orders and then stacking more and then continuing price. Okay, so it's just textbook, and this is basically how the markets need to move. So this is just the market makers manipulating price, closing out previous positions, mitigation, any imbalance that was left, which is important in some degree, but imbalance isn't always needed. But yeah, moving on, where would be the next valid sort of point or break of structure? Well, as we have, this is a bit messy. We have wicks on both sides, wicks, but this is the most recent higher high, and then we have a higher low here. Now, bear in mind, in these order blocks and these mitigations, we do have lower time frame entries that we can take, but I'm not going to get into that in this video. This is just showcasing, mitigation and why price is doing this, okay? So if we just carry on, this is the most recent higher high. So where did price break? Where it was on this move here, okay? So again, break of structure. We broke that wick. We put in a new higher high. So if we go back to the very first video, supply and demand, where is the consolidation and where is the expansion? Well, we have a clear range or a consolidation here. So you see price is moving sideways. What we can see is we have this move that is moving up. So we can sort of disregard this, and then we can look at moves from, say here, because this is where price is moving sideways. So we can see a clear demand level. This is just building liquidity, and price is getting ready to initiate out. Okay, so what we have here is a range, or our consolidation. Price then initiates out, which basically means moving away and breaking structure. And then we have a mitigation, which is, as we've discussed, price comes back in, mitigates, fills orders, more orders being placed, and then finally the fourth, what happens next is basically continuation. Okay, so where could we mark on our range? Well, we could look at this, but that's the move that was continuing up. It's sort of from here. So we can take the sort of highest point and the lowest point of the range before price moves out. Now, of course, we do have an order block, which would be this little candle refined to that candle there. But in this example, that's quite a small area to be looking at. So what we can do is take the range from the high to the low, and then look for long opportunities within that area on the lower time frames. So again, price comes in to mitigate, rebalance all of these sort of moves here, because we definitely do have more buyers than sellers. Now you could be asking, well, this is the last down candle here before some clear momentum, which to some degree is correct, but it hasn't really broken structure, or it isn't a valid break for me, because it's just one candle and the move started from here. This is where price initiated out, that broke the high. And also another thing to look at is look how price came into this level here. You can see a lot of momentum, a lot of bearish pressure, and there's no entries on a lower time frame in this area here. So it's better to wait for lower time frame confirmation and look to see where your actual areas are, where price will more than likely need to mitigate before continuing, and we can see it's here. Clear demand, and that's what happened. So one thing we can see on the hourly time frame is price came in but then closed above the demand. So what this wick basically means is it just breaks of structure on lower time frames, because at one point price was down here but then it closed up here. So what does that say on a lower time frame? Well, that basically means we've got bullish candles on a lower time frame. That's breaking structure. And one thing to look at as well, if we was to drop down to a lower time frame, which I won't do, but we will have areas on the 15, 5 on this move here. So what we can see is we have the exact same thing. We have the exact same thing as here. So we have the range, break of structure. So this is the same, but it's on a smaller degree. And if we was to drop down to a lower time frame, we could see this. We have a range on these candles here. Initiation out, which broke structure. A mitigation of that area, and then the continuations. So we have entries within entries. And then you can see what price is doing now is continuing, and this is showing us clear order flow to the upside, and there's no rule saying price won't continue up, break structure again. So whether it be this move here or price will build liquidity, range, consolidate, and then initiate out. But there's no saying that we couldn't put in another break of structure and then see this happen again. Mitigate, rebalance, more orders being placed, looking for them demand areas, them order blocks, and because that's where price is more than likely going to gravitate to before we do see continuation. So I thought I would do this video just to cover up a few questions that I get on a daily basis about mitigation, order flow, and things of that nature. But I hope this video helped, and I will be expanding on this video with future. We look at different pairs and maybe take a downtrend for the next sort of example. But yeah, mitigation. Any questions you have, let me know in Discord.